Does a collapse of one bank lead to wider banking collapses? In recent days, the financial world has been buzzing with questions about bank stability. With headlines about bank failures making waves, many are asking, does a collapse of one bank lead to wider banking collapses? This topic is particularly relevant as we see shifts in the economy and banking sector. Understanding the dynamics of bank failures can help us grasp the potential impacts on the financial system. A failure of a single bank can indeed trigger wider banking collapses, but it is not a guarantee. The outcome depends on various factors, including the size of the bank and its connections with other financial institutions. A large bank that plays a central role in the financial system could cause a domino effect if it fails. When a major bank collapses, it can lead to liquidity shortages for other banks and a loss of confidence among investors and depositors. Historically, we have seen this phenomenon during financial crises. The 2008 global financial crisis serves as a prime example. The collapse of key institutions during that time led to a broader banking crisis. Smaller banks experienced runs as depositors feared they might be next. This panic can spread quickly in a tightly interconnected financial network. To combat these risks, central banks and regulators often step in. They may provide liquidity support or facilitate mergers to stabilize the system. For instance, during recent banking concerns, authorities have acted to reassure the public and maintain trust in the financial system. However, not every bank failure leads to a systemic collapse. Regulatory reforms and deposit insurance schemes have been put in place to reduce the chances of a single bank's failure causing widespread chaos. In countries like India, reforms have strengthened public sector banks and reduced non-performing assets, lowering systemic risk. In summary, a collapse can lead to wider banking collapses if the failed bank is large and interconnected, or if the financial system is already fragile. Nevertheless, existing safeguards and reforms can help limit the spread of issues and prevent a single failure from escalating into a broader crisis. As we continue to monitor the financial landscape, staying informed about these dynamics is essential for understanding the health of our banking system.